Thank you for checking out crypto.chartguys.com, the source for technical analysis in the cryptocurrency world. We are proud to announce our own crypto alert system designed to give you the most critical technical trading information possible no matter where you are. Keep your eyes on the market with mobile or email alerts for MACD crosses, RSI levels, and even inside bar alerts for dozens of coins across multiple exchanges. New features and proprietary ChartGuys indicators are already in development. Our alert system is very easy to customize and utilize, so don't hesitate to sign up for the most effective crypto trading tool on the market at crypto.chartguys.com. Hey everyone, checking in on the big three, and we'll also look at OMG here on the daily timeframes, and then we'll zoom in, and actually we're going to start with the shorter term timeframes and take it from there. For those of you that didn't get the alert that I was live yesterday, that was my fault. I didn't have the right settings on. I had it listed as unlisted. So if you've got the alert thing clicked, that still works fine. That was on my end. And in terms of what we're looking at right now just in the short term, still very cautious, and I'm currently all cash because I don't trust the bounce that we have going on right now. So going back in time, let's look at where we were yesterday when I went live. We had the 15-minute equilibrium pattern. We saw a nice bull move, and this is where I was scaling out my Litecoin position, and we'll look at that in just a little bit. But that's because, again, the bull move, when I look at a bull break on the 15-minute time frame, I instantly zoom out and say, okay, how does this look on the hourly time frame? And at that point yesterday, exponential moving average resistances. I sold because we were hitting these exponential moving average resistances. And if that is your play on these bounce attempts, you're scraping out a couple percent gains and you are keeping cash and keeping protective. Look at these exponential moving averages, the 12 and the 26 period, which are default on GDAX. But here on Bitcoin, every single bounce attempt is rejecting, unable to get over these resistances. So in my opinion, I don't trust any bull move until we turn these levels into support, until we see the 12 period cross the 26 period to the upside, giving us a bull cross. And just to go back to see similar action, where on the previous dump, the bulls struggled to get over these levels, and that's not a good example, so I'm not going to look at that. But the bottom line is, when you reject from a key level of resistance, whether it's a moving average or a previous price level or whatever, when you reject from it so many times in a row, when it finally becomes support, it is a very clear signal. So here we are with our equilibrium pattern on the hourly time frame from yesterday. So we had our low of the dump, people got in. Some people, a lot of us were using these exponential moving averages and taking profit. We then pulled back and formed a higher low overnight and then a lower high. And then here's our clear bear break this late morning. And it was a dump right around noon. And it was just breaking all the range, and the volume picked up for the bears, and we are now still weak. So exponential resistance continued to reject the price. It was a very clear bear break of that equilibrium, and the bears have been getting some really easy signals. There's not, at this point, it's not huge gains for the bears because we are overextended to the downside, and it is similar where they're scalping a few percent ideally to be able to stay cash and to stay cautious, because the bulls are going to show up in the near term. It's just a matter of when. Another factor as to why I took profit on Litecoin rather than trying for a bigger trade was because the RSI levels cooled off. So the reason for us getting into the trade was because the 15-minute, hourly, and 4-hour RSIs were all oversold. And then Bitcoin at the top of that bounce, the RSI had gone from 20 to the low 30s. And on the 4-hour time frame at that point, the RSI had cooled all the way off to the upper 30s. So that was enough for me to say, okay, all the reasons that I got into this trade are no longer the case. And we could very easily, I think this morning I put out the trading view chart that I normally do and said that, it's a 50-50 chance on how we break this hourly equilibrium pattern because the RSI levels have cooled off so significantly. So right now we're forming a potential bear flag, and a bear flag, if you look at this on the 15-minute time frame, it's when you can draw a parallel support and resistance line, and I'm not going to do a great job here as my magnets are throwing me off. But just parallel support and resistance, and let's make this line full there to make it easy to see, and parallel resistance. And it's not exact here, but this is something along the lines that I'd be drawing. And I'm watching this channel, and this channel right now is close to a bear break. If we lose the 15-minute, we need to see a bounce right now, essentially. But if we lose this 15-minute high or low, the odds of it being an hourly bear flag will instantly increase pretty significantly. So again, it's not about predicting for me. It's all about reacting. And right now I could say, okay, it looks like a bear flag. I'm going to say on the hourly time frame, the odds that this is a bear flag, I'm going to go with 55, 60%. I look at the 15-minute time frame. If we lose this 15-minute higher low pattern, I'm going to kick that up to 75% chance that this is a bear flag on the hourly time frame. I'm personally being very picky, again, because of the exponential resistances. I'm waiting for either hourly. Essentially, what I want to make my next entry is going to be 15-minute oversold, hourly oversold, and 4-hour oversold. The 4-hour is already oversold, so it would just be the 15-minute and the hourly getting oversold that would have me interested in a bounce entry again. Otherwise, I'm just going to be patiently waiting and looking to get over these exponential resistances for the hourly chart to get any kind of significant bounce to play out. So again, I've been trading other things while I've been patiently waiting today. Some nice opportunity in trades like oil, leveraged ETF, and things like that. I get a lot of questions on, where can we trade these things? Where can we trade Canadian MJ? Where can we trade oil? Well, because these videos get, views from over 100 countries, it's different answer for everybody. It's dependent on where you live. So hop on Google and start looking for, stock brokers that serve your area. And if you can get a stockbroker, the world of what you will be able to trade will open up very, very significantly. So that's what you want to look at. Individual brokerage account for a stock broker. And I use Fidelity. So that's where we stand on Bitcoin. Our resistance now is the top of this bounce, 9,462. The 4-hour time frame has a new resistance level, the lower high at 10,098. And let's not forget, the daily chart made a very significant bear break. So this level was our must-hold level that has now broken. And of course, the FUD magnified the move to the downside. We were looking for an equilibrium. Under normal conditions, I absolutely would anticipate that to happen. But because the FUD magnified things to the downside, we just went from a lower high to a lower low. So at this point, the bounce has lost the uptrend. The bounce from 5,800, higher lows and higher highs, lower high, almost a double top, and now a lower low. And again, it doesn't mean we're just going to dump right down by breaking support. So a lot of people might say, what's your key support level? And I've been saying for weeks at this point, 9,324. So that might lead people to believe, okay, if we break this level, I'm going bearish. But you would not want to go bearish on this break because, again, the previous action leading up to it, with the fact that we're oversold, I would never make a bearish entry with the 4-hour RSI oversold. And it's just another example as to timing being everything, where if this pullback was long and drawn out for another 3 weeks and then we broke support, it would be a completely different scenario than the all-out dump to break it in 3 days that we saw. So when we do begin bouncing and when we do get that hourly exponential moving averages, when we get those as support, we will be looking for a bounce on the daily, but we're going to be looking for a lower high on this bounce, and that's because of the lower high and lower low preceding the bounce that we're looking for. So that's where I stand. Bearish MACD cross on the daily time frame, weekly time frame, certainly not looking good for the bulls overall. And just it's not looking good. But the hope for the bulls at this point, there is still hope. And you'll note, and this is a good example, the hourly time frame. So we are watching an equilibrium pattern on the hourly time frame, and it broke. Actually, let's see. I'm looking for the 15-minute time frame. So yesterday, the 15-minute time frame, the fact that this pattern was an equilibrium and then broke bullish, and then we lost the higher low pattern, that wasn't game over for the bulls. The bulls then had a shot to form a higher low, and that's because when you zoom out to the hourly time frame, we were seeing that we formed our low, the high of the hourly bounce, and then our higher low. So that's what we're looking for now on the weekly time frame for Bitcoin. So it's not game over. So because the daily chart lost the higher lows, again, it doesn't mean it's game over. It is a little bit of a red flag, but just like we saw with the 15-minute time frame losing the higher low pattern, the daily time frame losing the higher low, but the weekly chart could absolutely give us a higher low compared to 5,800 and then a higher high to change the trend. So the top of the bounce has been set, just like the top of the hourly bounce had been set. We pulled back and formed an hourly higher low and then an equilibrium. So that could be potentially happening right now. The only downside to this for the bulls is the fact that it's way higher risk to be hoping for this to happen because of the lack of support. So below 9,000 psychological, which we just barely held, we're looking down at 8,393. So that's almost a 8% drop before the next support level. So I'm not giving up on the bulls yet. There are definitely red flags. There are definitely things that are going against the bulls right now, but not going to rule out the possibility that we could form a higher low and a higher high on the weekly. We're going to need some bullish news to see that happen. It's less likely than likely at this point, but it is still absolutely a possibility. I'll give it a 30% chance that could play out. 33% chance, 1 in 3 we'll call it. So we're going to know a lot more in the next, I'd say, month or so. Should get some more clarity there. Let's get into these other names. So Litecoin, a lot of what I'm going to say is going to be the same here. Litecoin, though, was such an easy bearish play, and it's times like these where I'm just wishing I had the ability to short, because this weekly or this daily swing on the short play was so clear, where we broke 205.20. That's the bear signal. Confirmation was the break of 200, and then next thing you know, we're down at 173. So big time bear gains in the short term. We have lower highs and lower lows on the daily now, and looking at the weekly chart, I'm looking for an equilibrium on the weekly. So this is more likely to be an equilibrium than Bitcoin is, just because the bounce was more significant. So we have our high, low, lower high, and we will look for a higher low compared to $100, which was the low of the dump. So that's what we're going to be looking for. And this weekly equilibrium pattern could play out here on Litecoin, just visually looking at it. Again, I'd say about 4 to 6 weeks. So while that's the case, there's going to be limited trading opportunity and tightening ranges. So there's not, we could be entering a lull in the crypto market for the next couple of weeks, just in terms of, the weekly range shrinking up compared to the gains that we saw on the original bounce. So weekly inside bar bear break was at 200 as well. That was another bear signal for the longer term bears. 4-hour time frame hasn't broken the low yet. Litecoin's the only one of the big three where both Bitcoin and Ethereum saw another leg to the downside, not Litecoin. So that's a good sign, where 173.82 was support and we bounced off of 175.01. We still have a very clear lower high pattern, and look at the hourly exponential moving averages. Every single bounce attempt rejecting from either the 12 or 26. No candlesticks able to convincingly turn them into support, and no bull cross of those moving averages. So at this point, the lower highs on the hourly are very clear. We have a lower high there, another lower high at 187.69, another one at 185.95, and we will have a little bit of a double top here at 180. So that's where we stand. Let's see, does it look like a bear flag on the 15-minute time frame? A different setup. It is not. I could not draw a bear flag here like I just did on Bitcoin. This was an equilibrium pattern that broke bullish, and Bitcoin on the 15-minute time frame, look at that bounce right off that support line that I drew, still staying in this channel. And if we do see a bull break above this channel, that will negate the potential of a bear flag. So that's where we stand on Litecoin. Still looking at Litecoin as the name to play. And again, that's what I played yesterday. And the bounces are nice. Although I might play Bitcoin in this scenario just because we did get that next leg to the downside, and it might be a little bit more overextended. I haven't decided yet. I'll decide in the heat of the moment. But again, my criteria is very clear. I'm not entering a trade until I see 15-minute, hourly, and 4-hour all oversold, or until I see hourly exponential moving averages become support. If none of those two events happen, I'm not trading anything, and I have no urges to trade anything because it doesn't fit my criteria. Imagine you're a robot, and those are the inputs, and if those inputs are not hit, then you don't do the next action, which would be to trade. So looking at Ethereum, daily time frame, just a waterfall after breaking its key support of 836.60. Huge gains for the bears there as well. Even the bear break of 786 and 780 has some significant downside action, and it's just getting crushed. This is the weakest, obviously, still. 4-hour time frame dumping down to lower lows, down to the mid-20s on the RSI again. Hourly time frame continues to reject from exponential resistance. It got over the exponential resistance more so than the other names, but obviously couldn't hold it, and that's because of, Bitcoin correlation is going to ruin it. Almost a double top there on Ethereum. And here, right now, the bounce that we're trying to see play out already confirmed that it's a bear flag on the 15-minute. So 15-minute bear flag confirmed, dropping down to lower lows. Bitcoin has not done that yet. So just another reason, or just another example where Ethereum is weakest out of all of these names. So Ethereum resistance on the hourly, we're going to be looking at 716.79. And the weekly time frame still would be looking for an Ethereum equilibrium pattern. So 555 is the key support. And it's probably time to start keeping an eye on Ethereum for the potential that it will start to give us some of the better bounces. Just comparing right now, ETH BTC. Daily chart still in a downtrend, still close to oversold. I'm going to be watching this chart a lot more in the next week. And that's because I'm still anticipating ETH BTC to form a higher low on this weekly chart. Volume completely dropping off for the bears, declining volume on consolidation after the breakout, looking for a higher low. So I am definitely keeping an eye on ETH. I have not paid much attention to it on the bounce, but I definitely know to keep checking in on it, because there is going to become a time, in my opinion, in the near term that Ethereum is going to be the name to play. And I think that could be within 2 weeks. So I'm going to be watching very close. and I will certainly keep everybody in the loop. OMG, just wanted to make a point here where OMG, we covered it fairly recently, and it was the most bullish, one of the more bullish altcoins just comparative to Bitcoin, because we had higher lows and we broke the top of the bounce to higher highs while Bitcoin did not. So that favored the bulls, but it's just a perfect example where no matter how strong you are, if you're correlated to Bitcoin and Bitcoin breaks down, you're going to lose the uptrend, and OMG is dumping with it. So the 4-hour RSI here is oversold. We're in a very similar position. So the point is, even though we broke bullish, even though it was better signs, you're not going to escape the correlation unless there's fundamental reason for big volume to be pouring in to break that correlation. And the hourly chart, consistent weakness, although we did get a nice little hourly higher low and higher high. So that's another example where it ended up a little bit more bullish. But these, you would look at this on its own individual chart and say, man, there's so many false signals where the bulls get higher lows and higher highs and then break down and give it all back. And it's all because of the correlation to Bitcoin. So that just shows you how important it is to be watching a little bit of everything. So in terms of the daily chart here, the low of the dump right now is 1305, and the hourly resistance I'm watching is 1388 and 1402. Certainly a lot of volatility here as well. The bounce went from 1344 initially to 1480, a significant 10% bounce in just those few hours. So definitely altcoins still have some nice volatility for trading, and OMG is an example of that. So another point I want to make, I know I keep encouraging people to teach others to help learn more. Also, when you're doing your own analysis, don't just do it in your head. Don't just look at a chart and go through all this stuff. Write it down. I cannot stress enough writing it down. When I was learning technical analysis, I would emulate what would my mentor say as he was looking at this chart. I would post the chart. I would write down about 5-6 sentences, a little mini paragraph over what I was seeing, and that gets it out of your head. It gets it on paper, and it allows you to go back and review it. That's the important part. So you make your analysis, and then you go back and review it and say, okay, where did I go wrong? What was a potential signal that didn't follow through, or what was a good signal that did follow through, and that was, the clue for me to get into the trade. So write your trades down, because otherwise you're not going to remember everything that you're thinking about the chart when you're just looking at it. Half of that's going to be lost in the ether of your brain, and definitely want to have something on record. And even just writing it down is going to burn it into your brain more. When I do key levels on stocks every morning for the TheChartGuys group, because I'm writing down those key levels, they stick in my brain, and it makes it easier for me to remember without having to constantly look at the chart. I already can see the chart before bringing it up, and that's in my opinion because I am writing things down in the process. So I appreciate you all watching. I hope you continue to do good things. It's going to be a interesting overnight and into tomorrow, because again, I do believe there is a decent bull opportunity approaching. I'm just being extremely cautious and waiting for the bulls to prove some strength to me, or waiting for another oversold dump. So thanks again. We'll see you soon. Have a great rest of your night.